All right. So does anybody want to go over trades that took this week? Anyone wants to take the stage?
I got another question if you want. I mean, I don't want to be the only one asking questions, but
No, that's fine.
On Wednesday.
Oh yeah. Hold on, Sid. Nick, what were you saying?
I was gonna say, so in one of your videos in the advanced course with the videos, you were going long on the 4-hour time frame break of structure. When it comes back in, because every single time we have a break of structure, we have a nice retracement because that's where the sell stops are or buy stops are, just like liquidity in general. So how would you go long at a break of structure on a 4-hour time frame? Like, would you go on the 1 minute? Because I see you do it on the 1 minute, but I don't know if I should do it on the 15-minute or 5-minute, or how would you go over that?
Okay, so you pretty much, yeah, so I understand your question. So for our PO, here's a bigger structure right here. Right here, here's one. So do you see the BOS right here?
Yes.
Okay, so we got a 4-hour breaker structure, right? Because we see this on what time frame? On the 4-hour. So I'm not going to sit here and say, oh no, that's a 5-minute. No, that's 3 confirmation, 4-hour. I see it. That's what I'm gonna call it. So we mark it up. So that's a BOS. So now it's time to find the POI, right? So we have this candle that's like a liquidity. Now this candle is huge. So obviously we can mark out the whole POI and wait for price to give us T1 or T2 on the lower time frame, right? Confirmation. Or we can drop down 2 times. I recommend 2 time frames, down 2 time frames, and look for the POI closer to liquidity. So before I get into this, I'm gonna let you see what type of range this is. So what type of range is this that we're currently at on the 1 hour?
T1.
Okay. So if I ask you, do you think price is gonna now go up from here after we take out this low?
No. Well, I mean, it could, but it could, but I think it needs to come down lower to take out that other liquidity. And because, like, I'm gonna draw it out too real quick for you as well. Just like this one right here. Wouldn't it take out this low as well? Because this is liquidity on a smaller time frame, because every low is a liquidity point on a smaller time frame.
Yes. So now let's get into a quick logic. All right. So a quick logic thinking and say, if the institutions are gonna take out stop losses, if they're gonna take you out, right? It makes no sense for them to push down 30, 40 pips to then take you out. If it's a manipulation, it's gonna be fast and quick. So that's why we always choose the closest POI, because it's fast and quick. Like notice here, it didn't take out all of this. It just took out this 3 candle formation right here, and it tapped into whatever it came into in here, and it dropped. Quick. It took out these equal highs right here, and it came into whatever it came into in here, and balance for price action, and it dropped. So it's quick move. So for me to say that price is gonna come all the way down here, take out this, I'm kind of reaching. So price is already in the POI. It's in the unmitigated wick. This is the liquidity. Here's all of the sales stops. Take them out. What's next? A push up. If this fails, okay. Now we have a reason to come down. Now we can say, okay, this is equal lows, because obviously you drop down to the 15-minute, that would be a low. So now that's equal lows. Now we got a reason to drop down lower. And then we can go up. So does that make sense? Pretty much what I just said.
Right. And I just saw like there was a unmitigated wick on the hourly too. This one I marked down purple. Is that correct as well? Like we could bounce from there because that's the closest POI to liquidity.
Yeah, exactly.
Gotcha. Makes sense.
So,
thank you so much.
And eventually you get to push the upside. So if you were still thinking we gotta take this low out, right? That pretty much just goes against what I just said. A lot is trade what you see and what you think, because what is currently PA doing right now? PA is currently doing this. So that's what it's currently doing. So that's what we're going to do. Just follow price action. Don't stay here and try to guess if they're gonna take this low out or not, because it will maybe in the future. But right now, that's the low, that's the POI. That's it. That's all I see. T1 formation. Why not? Take my trade. I'm gonna target this right here, right? So we went from the 4-hour structure break, which was this one. There's a bigger structure in the 4-hour time frame, and then we had that major POI here. So that POI was this entire 4-hour candle. Break it down, because obviously, if we're looking for a refinement or a direct entry, we need to go down time frame. So that's a 1-hour time frame, right? The liquidity is built here. Let me see if this is A-shape. No, it's not. All right, the liquidity is built here. That's the low. Okay. So what's the closest POI to this low right here? We take out these equal highs. So we take out buy stops. All right. Now, this is something that you guys have to understand also. If the market, the big players, if they're going to make a move to the upside, they already took out everyone up here. Okay. Everyone down here is currently locked in profit, right? Break even, etc. There's a break of structure to the SMC traders, change of character for those that trade that. So what's going to happen? They expect this. Okay. What's down here? People that trail their stop losses from here to here. So if they already took out everyone up here, then they need to come down and take everyone down here before they make that actual original push to the upside. So they come down, they take them out. Now what's going to happen for those that trade smart money, right? They're going to see this now as a POI, and it looks, very nice because it took out equal highs, right? It looks very nice. And then they're going to expect this to hold, right? Now this looks too easy. It's not that easy. So, it looks very obvious. Then what happens? Goes into there, and then takes them out. So imagine they got taken out here and they got taken out here. So they need to take out both sides at some point, obviously. But what I'm trying to make you understand, guys, is that it took these people out first, and then it took out everyone going along here before it even made the original move to the upside. They didn't just go without not taking the people down here that were looking for longs. It took these guys out before it made a push up. It built liquidity, took them out, then we pushed to the upside. And then where is it coming from? Higher time frame, and going after everything that was up here. Everyone having their stops protected, or their positions protected, shall I say. Right. But anyways, going back to what I was saying. So that's the closest POI to liquidity. Not in this one, but this one, imbalance. But that already filled the imbalance. Price broke structure, which depends to get taken out. This is the only thing that we see here. That's the one that we're going to monitor price. Now, if you want to take it directly, drop down to the 15-minute. And now you want to ask yourself, right, what is the 15-minute or the 1-hour POI lining up with on the 15-minute time frame? So here's the open right here. That's right here. That's the open. And all we see is simply a wick. That's all we see. It's a wick. So all you're going to do is just move your SL to the wick, and that becomes your direct entry. That's it. That's how we refined the POI, right? So you would take it from here, and then your stop loss will depend on you. It's really up to you. We know that the strong low, which is this one, there's a strong low in the POI, will not get taken. So you can obviously put it just below here, but take it directly. In this case, it's GU, I don't know, 8 pip, let's say, for example. Direct entry, target right here, 41211. And that's how we take direct entries. Confirmation entry. Now the POI went from a 4-hour to a 1-hour to a 15-minute. The most logical time frame we can use is 5 minutes and 1 minute. because now the POI is smaller. So now we can use 5 and 1 minute time frame. Now I don't want to confuse you from the breakdown. So in the 1 hour, it's quite obvious that we cannot use all of this. Right? So I drop down to the 1 hour. Okay. So we need to see liquidity, order flow, break of structure. We look for everything. We look for the same thing on every time frame. We have to break a structure, 4 hour, liquidity, unmitigated wick, just above it, liquidity right there. That's the POI. So this went from a huge POI, which was over 30 pips, into this POI right here. That's what we're going to choose. So now because it's so small, logically we can use a 5 minute or a 1 minute time frame for a confirmation entry. And then that's hot taking, right? Yeah, simple as that, to be honest. But that's because it wouldn't make sense to take it on this huge area right here. I better take out liquidity.
I have a question.
Yeah.
So if you go back to like the 15-minute where you were looking for your POI that you refined down, you said instead of using the whole long wick, we're going to use this small wick that was like next to it. Why are you choosing to use that one?
Why am I using that wick?
Yeah, no, you refined it down smaller.
Yeah.
Like there was another wick. Yeah, why are you choosing to use that one? That's my question.
Because it lines up with the open of the higher time frame block, which was this, the 50%, or well, in this case, it will be the open of this wick. So the open of this wick, unmitigated wick, lines up with a 15-minute unmitigated wick. And that's how I took it. And that would be a direct entry. I mean, that's how you would take them. Like that's it. that's literally it. And like we can, like I can show you multiple examples where it works out many times. So let's say, for example, we got Asia, we got a big structure, we got liquidity they want to take out. All right. So we go to the higher time frames. So once you identify your liquidity, we go to the higher time frames. All right. So here's my liquidity. So now let's be real here. So that's the high, all of this. That's what I expect price to take out. Okay. Let me just make this perfect because it's very annoying. There you go. So I want all this to get taken. Remember, if price is going to make a manipulation, it's going to be quick and fast. So go into the 4 hour. Okay. So it's a 4 hour time frame. Now, if I ask you, do you see anything clear here? You would say, well, if the liquidity is on the open of the wick, then we can use the 50% of the wick. We're in a 1 hour time frame. The liquidity is here. It's on the open of the wick. Then we can use the 50% of the wick. Your short will come in here. You go to the 15, it'll look like that. Lines up with another wick. You go to the 5 minute. Lines up with another wick, which is also a strong high. Okay, I took out this previous high right here. I don't know if you can see it. Right here. See that? Took out this high. Taken. And you go to the 1 minute. That's how it looks. The liquidity just below it because the market is fractal. And that's how you take a direct entry. Now, you have to understand your broker, their spreads and whatnot, because it would just depend. If you get tagged out and stay in the trade. Yeah, so either you get tagged out or you stay in the trade. And your stopper will go just above because we anticipate this to hold, it shouldn't break, right? And that'll be your entry. That'll be a direct entry. That's how it looks.
Okay, thank you.
Yeah, and like over here too, let's go over here just real quick. Just kind of want to just prove the point on this. So we have liquidity, have Asia high, Start from the higher time frame. Well, here's already showing it, so we can't do much with that. So there's the red line. What's just above it? A wick. So we look for a short here. And there's your trade. That's direct entry. All right, now here you would have got taken out break even because you would have got tagged in and then it broke structure right here. And then you would have gone break even. So this would have been a break even trade for you. But notice how it never took out this wick. All right, at least on this broker, because every broker's data is different. So, but I never took out that wick. And then you could have looked for another short in here to take out this. And then because coming from where is this coming from? Higher time frame. So you can hold that short all the way until let's see, until here at least. This will be a safe exit. So that's short from there. Let's say you didn't get taken out, for example. Let's just say you didn't. You will exit here. And that'll be your higher time frame. And now notice what pattern this is. That break, get a retracement, another break. All right, take them out. And this is a formation that was formed on the 4 hour. So yeah. So are you guys seeing that it's like the same thing and every time frame? It just repeats over and over again. That's all we're looking for. But yeah, so exit those out. Let me read the chat. Oh, the guy that was asking you the question, the 4 hour. Did that make sense? My fault, man. Kind of went off topic there. But did that make sense of the 4 hour breaker structure and how we got that POI? I think it was Nick.
Yes, sir. That was perfect. Thank you so much for explaining that.
Okay.
Appreciate that.
Yeah. So I mean, you notice down the 4 hour, it looks like we enter off of a random area, and it makes no sense to the people that don't trade this way. You see, it looks random, but we have the reason. We had Asia liquidity, and just above it, we had a unmitigated 4 hour wick, which was also a 1 hour wick, and that's where we took the trade. The manipulation is going to be fast and quick. Now, if you're not confident to take direct entries, then just wait for it to give you something on the lower time frame.
Okay, I have a question. Can I annotate?
Yeah, just go ahead while I read through the chat.
All right. So it's about the little ranges inside the ranges. Because sometimes I have like this question about if it's going back to the main range. Let me see if I can draw it. Let's see how I can explain this. Okay. So let's see. Okay, let me see if I can explain this. So let's say that this is the beginning of my range, right? But what happened? You said that every time that we have a breakup structure, we form a range.
Yeah.
Right? So this could be a range as well.
It is a range, yeah.
Exactly. So, but this is my main range because it's still not being like, the range is not being disrespected until this point.
Mm-hmm.
Right? So what happens, sometimes the range is just respecting this one, right? Yes. So this range right here is invalid already. like this invalidate the range, right?
Well, it wouldn't invalidate the range because the only reason it came into this strong low, remember what's inside of a POI? A QM.
Yeah.
Right? So if this was aligning up with a higher time frame order block, then where did price come into?
Exactly.
Came into the open, which the open lines up with a strong low. So that's why price came into a strong low. And if price came into the discount, then you don't need price to come down here. Right? So inside of a higher time of order block, there's a QM. Right? So and that's a good question. So which QM do I use? Well, what's the higher time frame order block telling you? Right? What does that line up with? And I think I do have an example on that. Let's see. Let's go to.
I will delete the annotation.
Yeah. Let me try to find an example on that. Drop down to 15. I think this would be a good example because we have price reacting from this. Okay, so yeah, this is a good example. Okay, all right. So look. So this is what we see here. Now we had a bigger structure on the lower time frame. So just keep that in mind. We broke structure on the 5 minute. We're here. So our new range is now from here to here. That's a bigger range, right? So now I've asked you, on this time frame, with this data that you have, is it going to react from here or from here? Which one? Which one do you think price is going to react from with only this data that we have, or is it not enough data for you?
Sorry, yeah, I think this one is going to be more valid because I already have like liquidity over.
Yeah, well, now the question is this enough data for you to make a decision, or do you have to look at where price is at in the higher time frames?
Well, it's enough data, but I don't feel like comfortable enough at least by now to do it like that. I would rather be looking at a lower time frame, a good QM, so I can take this with confidence, or looking by confirmation or something like that.
Okay. Well, yeah. Well, without looking for entry bias, but like which block price is going to react from, right? So if we go to, hold on, read the chat. Recognize page range. Yeah. Yeah. Exactly. Yeah. So if we go to our time frame, what do you see here?
It's just a wick, but we have this as well.
Okay. Yeah. All right. Perfect. So now we saw the view on the 1 hour. We saw the view on the 15 minute. Let's go down to the 5 minute. Now, what do you see here?
Okay, 5 minutes. So in the 5 minutes, I can see this POI.
Okay. So now, as structure wise, where's your overall structure, like your current structure?
Well, let me see. As I can see it. So this is the structure here. So this will be my current range from here to here.
Okay. So if that's your current range, premium discount. All right. So it's fair enough if price reacts from either level here or down here, correct?
Yeah.
Right. Correct. Okay. So what do we know about after every break of structure?
It's creating a new range.
Yeah. So at the bigger structure, a new range is created. Now, do we want a strong low to break, or we want a strong low to hold if we're overall bullish?
Sorry again.
I said, do we want a strong low to break, or we want a strong low to hold if we're overall bullish?
It should hold.
Yeah, it should hold. Exactly. So now, can you mark up your overall order flow that you see on the 5 minute?
So this is mitigating right here. This is mitigated right here as well. Over here, this is mitigated right here, following the 5 minute. Yeah, that's what I see right now. This is the zone unmitigated, but I don't see any. This induced, like this liquidity is so, it's really above, so I don't know if I can count it. I don't be comfortable to taking around from here. At least that something like this could be liquidity.
Okay. Yeah. This is it's fair view. So why wouldn't you count this as a breaker?
As a what?
Or as a breaker? If this high took out that low, then broke structure. So this was supposed to hold, but it didn't. So that's a breaker.
Yeah.
So price broke here, went to the upside, break structures. You don't have a new range. Okay. So now that's foreign order flow. So order flow's intact or not. Cool. That's just part of that process. So now we need to identify liquidity. All right. So obviously we have no clear liquidity at all whatsoever that looks nice to even take this or this at the time being. Sure, we can say that we can expect this to happen, but it doesn't need to do it. So if that's a low right here, that's for the swing could then take out that high, then we can expect price to come into this block right here. Now, if this is our liquidity, and we can't judge off of this time frame by itself, we got to go to a higher time frame. And we go to the 1 hour, right? The only thing you're met with is this wick and this wick. But now this can be, some people know it as a hidden base. Some people know it as high volume imbalance. You know, whatever you know it as. Okay, that's a POI. So this is a point of interest. So that's the liquidity, that's the POI. That's the only thing we have. I don't have anything else. All right. So that's the point of interest right there. Whether it's a hidden base for you or a high volume imbalance, that's the POI. So now if that doesn't look good, which it doesn't look good at all, go to the 15 minute. All right. So now in the 15 minute, that POI, which is this, is an order block. That's all it is. It's a block. Right now, this block is not just a random block. It's the one that was in right here in the higher time frame POI, which is the 1 hour. That's the liquidity. That's the POI. Right now, remember, if it was in manipulation, it's going to be fast. This candle's coming in quick. It's just dropping fast. It's going to take everybody out. So what is it doing? What do you think it's doing by breaking this supposed structural low point?
It's making people feel in the trap.
Yeah, so it's, you know, just fear of missing out. It's pretty much getting people in the market short, right? And then we play this out. That's what happens.
Yeah.
Takes you out. Now here it looks like, oh, it's going up slow. But look at that. The only person, people, or, you know, whatever can make these type of moves are just the big players, the institutions. They're the only ones that can just give you such an impulsive push. So we found the liquidity. We got sellers in the market. Fear of missing out, why not? POI because of 1 hour. Now, if that didn't look too obvious, like it's completely understandable. 15 minute, the block that was in the 1 hour, that's what we're going to choose. And now we go down back to what I was saying. Which strong low are you going to use? Which QM? This one or this one? That's the one we're going to use because it lines up with all the higher time frame POI, the higher time frame blocks. So that's confluence. So we add everything together, and because everything is lined up together, that's the one we're going to use right there. Now, it's fine if you're seeing this to get taken out, but the higher time frame block is telling me this is the one we're going to use, and that's based on our rules. That's the one we're going to use because that's what the higher time frame block is telling me. So we're going to use that. Now, if this fails to go higher, now then what? This 100%. That would be my next area to go long. If it fails, then it go long. Right? Only if. And then that obviously will create a fifth swing. Then we go long from there. As simple as that.
Makes sense. Thank you, man.
Yeah, and of course, it wasn't the best POI, completely understandable, but we have to train ourselves to see it that way, because if we're looking for perfection and, you know, for it to look good, we're just not gonna find it, man. Like, you know, so this was not the best, but the logic behind it hopefully made sense for you to understand why we chose this and why this right here happened, and then why the move to the upside happened. And of course, we had equal highs above and whatnot. And for everyone to trace SMC, just because you got equal lows, equal highs, it doesn't mean it's going to take it right now instantly. It'll take it whenever it wants. All right. So whenever it wants, it'll take it. But what you have to understand is all the confluences that will line up together why we took it. Because keep in mind, all of this is a what? It's a POI. All of this is a POI. It's huge down candle. It's a POI. All we did was pretty much dissect what was going on in that candle. And this is the data that we gathered in that candle. And that's all we did.
I have a question.
Yes.
So you would have chose the lower POI if can you hear me?
Yeah, I can hear you.
Sorry, somebody's calling me right now. But so you would have chose the lower POI if it failed to swing, right? If it failed to break structure to the upside.
Yes, because now it gave it a reason to go. So I'll anticipate this. Yeah.
Yeah. Yeah. Okay. I think you talked about that in your videos. I just wanted to double check. I appreciate it.
Yeah, of course. Right. Now, I'll be confident on taking that long because of where it's coming from. All right. Now, of course, if it's not coming from anywhere in a higher time frame, then, you know, obviously I don't expect this to hold. I expect this to just drop. But because we're coming from a higher time POI, that's the reason why I said, all right, we're price failure swing, then I'll take it from here. All right. But then also, if you look closely on the 15-minute mitigation, you can see it clearly. The block mitigated, the block mitigated. So you can see the order flow. That's already intact. So like there's many ways to say why we're going to choose this. But the most important part was a higher time frame block, and that was it, which was this entire area right here. Can you go through Friday EU? Yeah. Hold on, somebody fighting with their mic. All right. All right, so Friday EU. Friday, which was this one. All right. So the question was, why did Asia high? Why did it hold? I expect to be taken because we had equal highs above it. Instead of that, a hold return 50% euro from which we could target return 50. Yeah, well, I mean, just because that's equal high, like I mentioned, it doesn't mean it's gonna take it right now.
Is this Zoom just to ask questions? Like you're just answering our questions?
Yeah, I mean that's what the calls are for. It's for you to share chart, share screen, and
Hello?
questions and whatnot. Yo, can you hear me? Adam.
Can you hear me?
Yeah. What are you saying?
Hear my question? I was asking, is this Zoom just so you can answer questions that we have?
Yeah, it's for you to just ask questions, share screen, share chart, you know.
Okay. So for me, I do think that I'm getting a lot better when it comes to the ranges, like identifying ranges, identifying where the inducement is, and maybe where liquidity is sitting close, to the POI. My confusion when it does come to the POI though is when there's like, and I think you said in like one of your old videos before we switched over to this new platform, you were like, there's like a POI that we choose, there's an extreme POI. And I'm guessing now that I think about it, when you were explaining it earlier, like if we do have a failure swing, that means there's an opportunity for price to go into an extreme POI. But I get caught up in seeing like multiple POIs after I reframe down. So like I'll see like a breaker, or then I'll see like a unmitigated wick, and I'm stuck on choosing like, okay, is the price going to go into an unmitigated wick, or is it going to go into the breaker? Because they're both like similar areas, so I get stuck on which one to choose. I wish I could show you my computer, but I'm not at my computer right now.
Yeah,
I do think I'm getting a little better on choosing it, but that is my confusion.
Yeah, so to clear your confusion of pretty much via words, well, I also just explained it on the Zoom just earlier, so you can rewatch that. But you choose a higher time frame order block, so the 4 hour and 1 hour. So that's your entire POI. So you wait for price to come into that, and you wait for a lower time frame confirmation, right? And then you want to take it directly. You choose a POI that is in alignment with or lining up with the higher time frame POI. And as simple as that, to be honest. We're not going to pick and choose which POI is the one that has liquidity, and the closest one to liquidity, that's the one that we're going to take. If price comes to that POI, right, and it makes a failure swing, then you're going to choose now the one below that. And it's just the same thing over and over again. But yeah, I kind of wish you could show your chart to show me examples of where you were messing up. But yeah, so I would do another call because people have more questions. So I'm doing another call real quick. Then to answer, who was it? Mitch? Is that Mitch? Mitcha? I'm sorry if I pronounced your name wrong, but I'm answering your question now. But yeah, did that make sense though? Whoever just asked a question to the POI. If not, then I'll go over it again.
No, yeah, that does make sense, especially with the failure swings. I think I have to keep that in mind. Like when price